Sometimes to really understand the huge forces that are shaping our world, you don't need to look at a whole year. You just have to zoom in on a single crucial day. And that's what we're going to do. We're about to break down Tuesday, January 27th, 2026, a day where you see politics, finance, technology, and this whole new breed of investor just collide. Let's get into it.
And it all kicks off right here, with just 4 words from the president during a visit to Iowa. It was a simple, kind of off-the-cuff comment that acted like a light switch, setting off this whole cascade of reactions across global markets. And boom, this was the immediate result. The US dollar plunged. We're talking its worst single day in almost a year. Now look, a weaker dollar can make US exports cheaper and more competitive, sure, but it can also flash a big warning sign about economic uncertainty. It's just a perfect reminder of how one political statement can have an immediate and massive financial impact. And that perfectly sets the stage for our first major force.
And that first force is the undeniable economic footprint of the White House. We're talking about actions and words that send ripples to pretty much every single sector of the economy, all within a matter of hours.
I mean, just look at this timeline. It really captures the sheer breadth of the president's influence on this one day. It all started in the morning with a dust-up with Canada, leading to threats of 100% tariffs. By midday, you could already see the ripple effects, with GM coming out and saying they could be on the hook for up to $4 billion in tariff costs. Then, in the afternoon, the focus snaps to healthcare, with a proposed change to Medicare rates that sends those stocks into a nosedive. And all of this was happening with the threat of a government shutdown hanging over everything. Just a whirlwind of a day.
Let's just pause on that healthcare piece for a second, because this is wild. We're not talking about little market jitters here. When the administration proposed these nearly flat rates for Medicare Advantage, huge players like Humana and United Health saw their stock values just crater by as much as 20%. So the takeaway is crystal clear. These policy proposals have immediate, multi-billion-dollar consequences.
Okay, so while you have this massive top-down power coming out of Washington, there's this other force that's been rising up from the bottom. It's been 5 years since the whole GameStop frenzy, and it's obvious now the retail investor wasn't just some flash in the pan. Nope, they are a permanent and seriously powerful part of the market now. And this chart just lays it out perfectly. Before the pandemic, individual investors were just a tiny slice of daily trading. Today, we're looking at nearly 20%. This isn't dumb money anymore, not by a long shot. It's a real, structural change in who actually moves the markets. And it adds this whole new layer of volatility that challenges the old guard. And you better believe Wall Street has been forced to take notice. As J.J. Kenahan from CBO Global Markets puts it, the pros learned a hard lesson about how tenacious retail investors can be. They're now a force that hedge funds literally track to make sure they don't become the next target of a short squeeze. That's where a flood of buying forces people betting against a stock to buy it back at a huge loss.
And this trend, it is only going to get bigger. Experts are tracking what they call the Great Wealth Transfer. Get this, over the next 2 decades, an estimated $120 trillion is set to move from boomers to millennials and Gen Z. We're talking about generations that grew up with zero-commission fractional trading right there on their phones.
But hold on, it's not all confidence and roaring bull markets. On this very same day, we saw some really deep signs of anxiety in other parts of the economy. A new report showed that 16.3% of home purchase agreements were canceled in December. That's the highest rate in nearly a decade. It's this crucial reminder that while retail traders are busy buying the dip, a lot of everyday consumers are getting very, very cold feet. So, while Washington and Wall Street were caught up in all the day-to-day drama, there was this quieter, but maybe even more important, battle being fought out in Silicon Valley. Yeah, we're talking about the AI gold rush. A super high-stakes race for tech supremacy that could literally reshape our entire future.
And the numbers are they're staggering. On this day, the AI startup Anthropic closed a funding round that rocketed its valuation to $350 billion. No, that is not a typo. We are seeing a completely unprecedented amount of money being poured into just a handful of companies that are leading the charge in AI.
But what's happening is that this gold rush has created this fascinating, high-stakes conflict. On one side, you've got the AI titans like OpenAI and Anthropic. They're centralized, they're focused on their own proprietary models. And on the other side, a kind of rebel alliance is forming, this decentralized network that's fighting for an open source, more transparent future for AI. This isn't just about business models.
It's a real philosophical battle for who controls the future of intelligence itself.
Mozilla's president, Mark Surman, he just captures the spirit of this movement perfectly. It really is a classic David versus Goliath story. It's this mission-driven effort to make sure that this world-changing technology isn't controlled by just a few corporate giants.
And you know, in this incredibly volatile environment, nobody is safe. On the very same day, we learn that Amazon is making a huge strategic retreat. It's closing all of its physical Fresh and Go stores. It just goes to show you that no company, it doesn't matter how big you are, is immune to disruption and the need to make some really painful choices.
And this brings us to our final piece of the puzzle. This is the place where all these forces we've been talking about, the politics from DC, the money from Wall Street, and the immense power of technology, it's where they all collide. We're talking about the fight for control over the U.S. Federal Reserve.
And really, this is the one question that's hanging over everything else. The term of the current Fed chair, Jerome Powell, is ending, and the decision of who replaces him has become the ultimate political and economic battleground.
The prediction markets are absolutely buzzing over this. On this particular Tuesday, the frontrunner is Rick Rieder. He's a total Wall Street insider from the giant asset manager BlackRock. The fact that he's the favorite tells you a lot about where the market thinks the power should be. But things are volatile, and you've got former Fed Governor Kevin Warsh and others who are still very much in the running.
But look, this appointment is about so much more than just monetary policy. This is a fundamental test of the Fed's independence. President Trump has been openly critical of the central bank. The current chair, Jerome Powell, was served a subpoena that he publicly called a pretext for political pressure. So with the president making it clear that loyalty is a key factor for him, the whole future of the Fed as an independent institution is really up in the air.
So after stepping back and looking at what happened on just one single day, this is what we're left with. From a single comment that can move global currencies, to an army of retail traders that can challenge Wall Street, to the incredible race to build artificial intelligence. It's clear the old centers of power are being challenged from every single side.
This right here, this is the new landscape of power. It's a four-way tug-of-war between Washington, Wall Street, Silicon Valley, and now the individual investor. The old rules are literally being rewritten in real time. The question isn't just about who's going to come out on top. The real question is, what kind of world are they going to create? That's the real story of 2026.